You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And today we're doing an update from the World Agricultural Supply and Demand Estimates report that came out last Friday. And then to talk about it, we're joined by K-State grain economist Dan O'Brien and a senior economist at the IGP Institute, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
Kicking off, we're going to talk through a few different of our commodities. And first off, looking at corn and first touching on the domestic side of things.
Of course, the corn market's such an important element for the United States, really between corn and soybeans, and wheat also important, but suffering more right now due to world dynamics. But on the corn side, really, as we were talking before we came on air, between us, really no changes in the U.S. domestic balance sheet from the February report to the January report, pardon me, to the March report, except a small lowering of the U.S. corn price projected for this marketing year. Again, the one that started last September 1st, going to end up here August 31st of 2024, dropped to 475. Interesting that we're at that mode now where we've come through about 2 or 3 months of very docile U.S. domestic markets. Not a lot of change. And so here we have a supply-demand balance sheet on the usage side. No changes at all. When you do look back over the last 3 years, say from the 2021-22 marketing year to the one we're in, the 23-24, ethanol usage was 5.32 2 years ago, 5.17 last year, 5.375 this year. So arguably, one sector that's holding up pretty well for corn usage in the U.S. is on ethanol side. Of course, that's helped by lower corn prices, and would add in on the feed residual usage was 5.67 2 years ago, dropped last year on a little bit lower production, down to 5.5, back up to projected 5.6, 5.7. Not a lot of change there. The export side, which is kind of would be the lead in on the international side, Guy, if you want to take it from there. On U.S. exports, 2 years ago, 2.472 billion, dropped last year. Again, the exports were the residual claimant after we covered the domestic bases for crush and feed use and wet corn milling, dropped to 1.6, 1.7, projected back up to 2.1. And there's a number of things happening internationally with competitors that all play into that change. Guy, what do you think?
Yep. Yeah, look, the corn export situation for the U.S. continues to be a bit disappointing. And even though we had non-U.S. corn output dropped by 2.3 million tons this past month, adjustments to our competitors' exports, Brazil really no change, but they're quite strong competing on that as their season extends. South Africa lowered their exports 500,000 tons. Ukraine shipments were raised 1.5 million tons to 24.5. So it's Argentina was up 1 to 25 million metric tons. So we're going to continue to see fairly strong competition on that side. Doesn't necessarily bode well for the U.S. Corn exports. Also, on top of that, we've seen imports from the EU down 1 million tons to 22. One bright spot in the U.S. situation is Mexico imports are up 1 million tons to 20.6, which should be approaching a record import for Mexico corn. Southeast Asia was up slightly to 18.2 million metric tons. South Korea, though, was lowered, and it's standing at 1.6 million tons. China imports estimates remain unchanged at 23 million metric tons. They should again be the biggest importer of U.S. corn this coming year of corn in total. Sorry. Overseas, one thing that's really hurting U.S. corn exports and even domestic demand is increased in wheat feeding. We'll talk about that in a bit when we get to the wheat values. Wheat values are cheap enough. They're pricing themselves quite aggressively into the feed complex. Overseas wheat feeding was up 1.6 million metric tons. to 158.8 million metric tons, which is 7 million tons more than last year's number.
And
Go
as
ahead.
we're
Go
And
ahead.
if I can add in on that, the pathway of what's been happening over in the Black Sea area, at Black Sea region, sure interesting in that, Ukraine 2 years ago had production of 42 million metric tons. That was a strong high for them. Exports of 27. Then they dropped off last year to 27 million metric tons. Still exported 27 million metric tons. But then this year projected at about 29 and a half, down to 20. Well, up in the last month from 23, 24 and a half, but still doing decent. And you've got then, if I can add in here, then Russia was at 15 million metric tons production 2 years ago. Last year, 15.8. This year projected 17, 16. There's been some change in production area. Some of the war-torn areas are being farmed now by Russia, so that's come into play. And Guy, any thoughts on that Black Sea region issue and where that's going to go?
No, nothing to really add from what you've put in there, Dan. While it tends they're getting a good volume of grain and oil seeds out of Ukraine Russia situation. I think that continues to be a bit precarious at times, particularly the Ukraine. But it just continues to surprise me how much volume they've been able to move out.
Well,
We might,
amen to that. Really,
while we're on the corn complex, might touch base on sorghum. Sorghum's probably one of the brighter spots in there. USDA raised U.S. exports by 5 million bushels to 245 million. China continues to be the strong buyer for that market and leaving a fairly reasonable premium in that market for U.S. sorghum. We're starting to have to compete at the moment with some southern hemisphere exports coming out of both Argentina and Australia in that sorghum market, but our basis has remained relatively firm.
Yeah, really, in terms of looking for a commodity that's been doing well export wise that affects Kansas, grain sorghum is it. It's had a strong run, and I think it's kind of like what we learned. The lesson we learned in the soybean market, we have a strong demand when we're relying on China, but it's a narrow base, and it's the last time we had any geopolitical back and forth that came into play, trade wars, whatever, it was grain sorghum that really was affected by that. So it's strong, but there's the element of geopolitical risk with our on and off relationship with China.
Yes.
And wanting to move on to another crop now and discussing wheat. And Guy, you mentioned that there's been an increase in wheat feeding.
Yes. Yeah, that's not a surprising but significant change. And it's as it competes with corn. But I think if you look at both wheat, soft red winter and hard red winter, it's quite cheap. And I know we're putting more of that and expected to put more of that in the first and second quarter of the wheat marketing year into feedlots in Kansas, Texas, and particularly in the West. Dan, you're probably more closer to that domestically than I am.
Well, Shelby, you and I have been watching those prices, commenting on the not so much the cash bids, though they've tightened up, but the new crop bids. The last week that we looked at them in the Garden City area, and that's where the feedlots are. That's where we'd be feeding it, and it got down to about 107% ratio between basically December wheat price, well, new crop wheat prices, new crop corn prices, and some difference in timing there. But the ratio had gotten down tight enough, close to that area of about 105, 106. Well, it's at 107, and it's if it's cheap enough on the wheat side, then people will feed it. There's some changes in rations that happen, all those real world pragmatic things that have to be dealt with. But yet, if it's cheap, it is what it is. And Guy, what you said, sure borne out in the last 3 years of the market, last three U.S. wheat marketing years. 2 years ago, we projected by the USDA, fed 88 million bushels, 77 million bushels in 22, 23, and that was in a dry year when we needed to feed something, a lot of that right out here in Kansas, and then projected this year at 120. So the lower wheat prices sure seem to be bringing that in.
Yeah, one surprising thing is that same week of the last week USDA report, we saw China cancel, it was a little over 200 uh,
Indeed.
million bushels of soft red winter wheat exports. And I've been trying to find out if they just canceled that or if they were buying cheaper wheat out of the Ukraine or some other origin. And I haven't been able to confirm that alternative purchase in there, but that did not that weighed on the market a bit. That said, following the USDA report numbers coming out, wheat was actually firmed up a bit. So maybe we've seen some bottom in both the corn and the wheat complexes. Both those markets have at least been steady to firmer since last week's USDA report.
And the only follow-up I saw to that same bit of news was that China had also canceled French wheat purchases and
Yes.
some others as well. So it's not just the U.S. So it makes you that may not be geopolitics as much as being in some contracts. They either they don't need it anymore or they want to get out of some contracts and buy something cheaper, which they're very shrewd, capable buyers, and they certainly do that upon need. So
yeah.
Let me add one thing in. I know we had to wrap up. Wheat ending stocks lowest since 2015-16. So again, we're bemoaning low wheat markets, but we tightened up even further with this report. And somewhere out there's a time of volatility coming when the Black Sea region doesn't come through with large cheap supplies, and then where will the world go?
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan O'Brien and Guy Allen as we continue reviewing the WASDE report that came out last week. We're cutting that short break now, but stick around because we'll be right back.